Hello everyone, my name is Matthew Frailey, founder of BreakpointTrades.com, founded it 21 years ago, way back in 2003 to provide advanced technical analysis, market commentary, trade ideas, and of course my passion, mechanical trading systems. Okay guys, last YouTube video I did was on Sunday, so I'm going to give you an update. Lots happened since, especially Bitcoin, which is now hit high of 94,000, and honestly that 100,000 round number is a magnet over time. But anyway, going to review that and everything else. Currently at this recording, it is Wednesday evening, about 8 p.m. Anyway, going to get this recording started now for our website subscription service. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Wednesday, November 13th newsletter. Tonight's newsletter, as you can see, divided into 6 major sections. Same general theme as I always keep. Again, as far as the market, as you know, after the market making new all-time highs last week, the S&P 500 tagging that round number of 6,000, we've had a roughly 3 days consolidation, and now we'll see where things go from here. We have the PPI, that's the core PPI inflation, that's the producer price inflation data is on Thursday. As you know, we had the CPI data on on Wednesday, and that came in basically in line, so we'll see how it reacts to the PPI. And then of course on Thursday morning we have initial jobless claims. But like I said, you know, the market is uptrending on all time frames. So far, we've had a 3-day consolidation on the S&P. We're still above the 9 EMA. That said, the recent bounce still looks reflexive. I wouldn't be surprised if we have at least maybe one more little pullback here, then we rally again to a new high. That's if we don't get a big thrust to the downside. Bitcoin, as already stated, hit roughly 94,000 and then it pulled back. But that's so dang close to 100,000. I think that needs to be tagged. One thing I've learned over the many years is these large round numbers are magnets. All right. The US dollar, that has had one hell of a rally off the September low. Okay. It's causing also a much needed correction in the precious metals, which I've been looking for. In fact, gold futures are down again tonight. The 10-year Treasury yield also continues to rally higher. And honestly, if that continues, that could be an issue for the market. All right, we still have some earnings, as you know. Anyway, let's go ahead and get started with things. Try to get through this quickly. So first thing, real quick, I'm going to talk about the mechanical systems. I'm not going to talk about the KISS systems here today. So as far as the mean reversion and volatility systems, we had quite a few open systems, and we still have quite a few open systems. And some of these are basically opposite to one another. So we have the SPY breakout system, which went long early last week, and that trade is profitable, so that is long. All right, and we also have the same long on MES futures. That trade, of course, is sent out to our subscribers. And at the same time, we have all these volatility systems. So we had 7 volatility systems that went short on Monday. That said, gold went short, and Apple and EEM, and those all closed out yesterday for winning trades. That said, we still have these open shorts on the indexes on the volatility system. SPY went short, DIA, IWM, and triple Qs. Again, those are the volatility systems. So we have those 4 shorts on the index ETFs. And at the same time, we have the breakout long on SPY and ES. All right, we'll see which one wins out. Honestly, what we could see is a quick pullback first. Maybe that pullback would allow these volatility systems to close out. And if that pullback's not too deep, it doesn't hit the stop on the breakout long, then maybe that can work after that. So we'll see, guys, but just giving you a quick update on those systems. All right, moving back to the general market analysis. So item number 3 shows the index sector table, what transpired today and this week. You can see the major indexes down slightly for the week. The Russell, which has been leading, it's been down the most this week, down 1.25%. Today was a bifurcation day with the Dow and S&P slightly up. weakness in the NASDAQ and Russell. Okay, Russell down 1%. As far as the 21 market sectors, roughly a 50-50 of up and down. That said, the breadth has been quite weak. So been a lot more decliners than advancers. All right. And as currencies, US dollar continues to be on a tear here, up 0.6% today, up 1.6% this week. That's one heck of a move once again. That is wreaking havoc, of course, in the precious metals area. Gold down another 1% today. It's down over 4% for the week. It's back down to 25.86. Remember, it basically got up to 2,800. So nice haircut there. For now, I view this pullback as that large wave 4 correction that I've been looking for the last month or so. So that has clearly started. Silver down 1.6%, down 3% for the week. GDX, the miners, down. They've been leading to the downside for the last month. And you can see GDX, the miners, down 8.9%. As far as the bond market, again, we continue to see rally in the 10-year, 30-year Treasury yield. Hasn't affected the market much yet, but if we continue to see that ramp, that could be an issue. As far as the other commodities, most of the commodities down this week, except for natural gas, which is up 12.6%. It broke out of that falling wedge I was showing on the weekend. Natural gas up 3.3% today. Most of the other commodities down as well, such as the index DBC, down 0.3%. Crude oil was flat today. Copper down, and copper taking a hit, obviously, from that strong dollar. Next, item number 4 shows the economic news calendar. It's already covered for Thursday, November 14th. We have the initial jobless claims in the morning and PPI, core PPI, that's producer inflation. We also have natural gas inventories, by the way. Since that just broke out, you want to be aware of that. That's at 10:30 Eastern. Okay, let's jump to the charts. First chart below, item number 5 here is Bitcoin. So Bitcoin, as you know, a few weeks back, started breaking out of this expanded wedge. We did a great job. Again, I got a pat her back on this. I like to stay humble, but we did a great job on this. We identified that wave 4 pullback in July into that weekly demand zone. We said we favored that to hold and for the Bitcoin to break out and go to all new time highs in a wave 5, and that has clearly transpired. So any of you who paid attention to that and went long Bitcoin or Bitcoin ETFs or stocks, you've done amazingly well. You should congratulate yourself, and thank you for listening. Anyway, you can see today Bitcoin hit a high of 93,480. So getting close to that magic round number of 100,000. You can see it pulled off the highs today. So even if it does pull back a little more here, I still think it's at least got to tag that 100,000 area. It's too damn close. It's a huge round number, huge psychological area. It is a magnet. When you get too close to those numbers, you almost always tag them. Next, image number 6. Here's the daily chart. Again, as you know, you can see this expanded wedge broke out, back tested it. Just absolute textbook action. Massive ramp off there. That was the back test. Was a great buying opportunity. That's always a low risk trade, guys. You can see the scream move up. Again, quite extended here in the short terms. You can see it pull back off the highs. But if you look at the MACD here, no MACD divergence. So that tells me that, yes, it's overbought. Maybe it needs a little consolidation here. It's quite stretched above its 9 EMA. But I think if it consolidates, I think it then goes higher and tags that round number of 100,000. Next, number 7, here's one of the Bitcoin ETFs, IBIT. It's been a great trade, obviously, from that trendline break. That said, you got a big spinning top doji today. So we are quite stretched. So may need to work down from here. Now, a break of the low of this doji would set a bearish evening star pattern. You can see it's been outside its upper Bollinger Bands for 3, 4, 5, 6 consecutive days. That's quite a lot, guys. Usually being outside the Bollinger Bands for a few days is quite extreme. So that's pretty extreme. This may need to work off and maybe even just come back inside the Bollinger Bands. So be aware of that. Just quite stretched here short term. And chart number 8, here's the leveraged ETF, BITX, same deal. Was up today nicely, way off those highs. Big spinning top doji. The other thing I want to point out, the stocks really underperformed today. You can see MSTR was up initially, big bearish engulfing candle. And most of the other crypto stocks look the same. So they tend to lead. So just giving you that warning. Wouldn't be surprised if we have some follow through to the downside. All right, moving on. Chart number 10. Here's the chart showing the 5 key major indexes. Again, as you know, last week made new all-time highs on everything except, of course, on the IWM small caps. Got outside the upper Bollinger Bands. So far, 3-day pullback here. We're still above the 9 EMA on these major indexes. Next, chart number 11. Here is the Dow Jones. So you can see this 5 waves that I drew. So we're in this 5th wave, right? And we're still above the 9 EMA. Again, remember 5 waves. 5th wave could end any time, but this could also extend, and it could be 5 waves itself. So next, chart number 12. Looking at the KISS system, here's the KISS High Performance S&P Daily System. Obviously, no changes here. Again, so far we just consolidated this week, last 3 days. Smart trailing stop is still at 57.95. It's nice and tight. Nice profitable trade from that entry in early August there. System has done an awesome job, quite honestly, keeping in the trend almost always. And if it gets out, it gets right back in at a good price. But you're always protected with that smart trailing stop. Next. Chart number 13, here's the 4 time frames. The daily on the upper left, we had that resistance cycle show up yesterday, and you could see it there today. So we've been struggling there. These cycles are very powerful, guys. You could see how price found support at that cycle over a week ago when the moving average ribbon was pinching. On the 195-minute, we've had the resistance cycle since late last week, and price so far has been capping price. You can see the ATR support in all the time frames. Pretty close here on the 78-minute. Next. Chart number 14, moving back to the standard charts, here's the weekly S&P. Like I said, so far just a small consolidation this week, down 0.17%. Last week, of course, we had that huge ramp after the election and right off that demand zone. So not surprised to see at least a little consolidation here. Next, chart number 15, here's a daily chart. Again, remember, we had that 4th wave ABC pullback in August, July and August. That was perfect. We identified that, and we've been uptrending since. This is, you can count 5 waves, 1, 2, 3, 4, 5. Right now, we have 3 little consolidation waves here. Is this a tight flag and we break up, or do we need a little more pullback? I wouldn't be surprised if we need a little more pullback first. That said, we'll see where this goes. We'll see how the market reacts to the PPI, and here's some fibs as well to monitor. Next, chart number 16. Here's another daily chart. Again, shows you this wave 5 that we're in. Again, guys, one thing we like to discuss here in these charts, just looking at our charts is a learning, it's like being in a classroom. So you can see here on the S&P how we had resistance here. You had a wave 4 pullback, ABC. This resistance, once it was broken, it became support. Again, absolute textbook action. You can see the 5 waves here. We're working on this wave 5. Next, just some other charts I showed in a week, and I'm not going to get into these. These are all still valid options. Here's another variation of this count. Again, all these are valid. And chart number 18, here's another valid count. Again, you can see this consolidation. So far, we talk about the 9 EMA, but this, so far, price is holding the 5 EMA short term. Next. Chart number 19, here's a 2-hour view. So as you know, we rallied off that 5th wave low in early November. Nice ramp up. Now we're consolidating. Honestly, this little bounce, lower high, kind of has a little bear flag look to it. That's why it wouldn't shock me if it comes down. So it could be like an A, B, C. Notice there's a gap, unfilled gap here. Yes, there's a bigger unfilled gap down here. But if we get down into that range, guys, then the structure is quite different. It's a little more bearish because that's quite deep. But we have a little open gap there that could be a magnet here on the downside. Chart number 20, here's a 60-minute view. Again, you can see that gap. I highlighted it there. You can see that little MACD divergence at that 60-17 high. To me, that looks more like a wave 3. We've had a pullback, bounce, lower high. Maybe that's a wave B, come down again. If we come down again, if it's not too deep, maybe just fills that gap, it could be a 4, then go up again on a 5. All right. So we'll see, guys. And chart 21, here's a 15-minute chart. So you can see the bounce. You can see, first off, you can see this consolidation, sideways consolidation the last 3 days. You can see how it's resulted in the moving average ribbon really pinching here. So energy is built for a pop one way or the other. Now that bounce off the demand zone from yesterday so far is reflexive. And what I mean by reflexive, it's not impulsive, it's 3 waves, A, B, C. That's another reason why I sort of favor maybe a move down here to fill this gap. All right, so we'll see what happens tomorrow. Let's move on. Chart 21, here's the triple Qs, KISS high performance system. Again, no changes here. Smart trailing stop still down there at 43.75. System went long, of course, back here. Chart 23, here's the 4 time frames. Just like in the S&P, you had the resistance cycles here in the daily where price has been struggling, and on the half day. Note the ATRs below. Next, chart 24, here's the daily chart. Remember last week we finally took out the July highs, which was a magnet. We've had that wording there for weeks, so we were expecting that after we bounced off that demand zone. And you can see, just like on the S&P, consolidating here, 3 candles were still above the 9 EMA here. Chart 25, here's a 2-hour view. Again, it is possible that we put in a 4th wave low here. It's also possible we come down again to make that 4th wave. We'll see what happens tomorrow. Chart 26, here's a 60-minute view. Just kind of shows you we could have a wave 4 low in here, or perhaps we come down again and it's down into here. Notice the open gap here. Chart 27, here's a 15-minute view of the Qs. Just like on the S&P, this sideways consolidation this week has resulted in moving average ribbons pinching here. Notice your open gap here. So this is set up, guys, for maybe a quick pop one way or the other. Okay. Again, given that we've only had 3 waves up here off that bounce from the low of yesterday, leads more credence to that being a reflexive bounce and maybe a move down to fill that gap. Chart 28, here's the Russell. That, as you know, had a heck of a pop out of this ascending triangle pattern. It's pulling in nicely this week. It's down more than the market. 9 EMA is right there as support. Next, chart 29, there's the weekly chart. You can see it's kind of pulling off this channel line. Remember, the Russell is the one index that hasn't taken out its all-time highs. All-time highs are still back here in 2021. Getting pretty close there. That's also probably a magnet over time. All right, guys, that does it for the major indexes in the market. Let's go ahead and move on. Chart 30, here's the VIX. So the VIX gave a VIX Bollinger Band sell signal on Monday by closing back inside its Bollinger Bands. All right, and it's, even though the market was, well, the market was up today. Even when the market was up, the VIX was down. And of course, it still closed down. And remember, this VIX Bollinger Band sell signal is essentially the same as this SPY volatility system. That's based on the VIX Bollinger Bands. Okay. So we'll see. I wouldn't be surprised if that short plays out in the short term. Next, chart 31. Here's that 60-minute chart of the VIX, focusing on these gaps. Gaps really like to be filled on the VIX. We have a couple of these open gaps above. There's the first one up there. And this last low in the VIX, take a look at this. You really have a good MACD divergence here. I didn't adjust this line, but you can clearly see it right here. That actually looks like a really good divergence. To me, I think the VIX is going to go up here, so I'm favoring a pullback here, maybe as early as tomorrow. Next, chart 32, here's the VIX with the VVIX and the VIX ratio. So notice the VVIX ratio is below its lower Bollinger Bands, so that's also a valid short signal as well. When it's above its upper Bollinger Bands, that's a buy signal, and you can see those have all been playing out. Next, moving to the bond market, here's high yield corporate. Again, as you know, this popped out of the channel, held that demand zone. So far, pulling in here, we do have a MACD divergence at the highs here, but let's see if it can hold this support. The trend line is your support, and the 50-day, 20-day moving averages. Chart 34, here's the 2-hour review. So far, you don't quite have ABC here. You have one wave down, a bounce. So if we get maybe a new low here, it could be an ABC. The recent high did not have a MACD divergence, so I am hopeful that this can, even if it does pull back, as long as it maybe holds this trend line, that it can try to rally up again. Next, chart 35, here's TLT 20-year bonds, just continues to melt down. So notice here I added these symmetry bounces. So far, the last bounce stalled essentially where the last one did. So we have not had any bullish breaks in symmetry here. So this really looks like it wants to make another low. Now, if it makes another low, we will have some MACD divergence here. But clearly, bonds have been melting down. Long-term rates have been going up. So that's an issue. Chart 36, here's the TMF. I've had this sort of wave count labeling. That said, honestly, that last low doesn't look like a wave 5, maybe more like a wave 3, wave 4 bounce. I could see this making another low, and then I would be watching because that would be a wave 5 with some divergence. Chart 37, here's the 10-year treasury yield, which, as you know, continues to inch higher. Remember, that moves opposite to bonds. Moving on to some of the sectors, here's XOK Technology. Still, remember, it stalled last time at the July high, which is logical. So pause in there a little bit. We'll see if this ends up just being a small pullback and eventually break out through that. Chart 39, semiconductors. Now, semiconductors have been a problem here. They have been much weaker, and they continue to be weaker. You can see this coil forming. You can see so far 4 down days in a row. This is an issue for the market if this doesn't start to strengthen. Chart 40, here's the banks, which have been very strong, though they were off the highs today, making yet another minor divergent high on the RSI anyway, not on the MACD. Clearly, though, that ascending triangle played out amazingly. Again, guys, here's another educational tip. If you're new to technical analysis, ascending triangles should be 5 waves, and this is how you label it: A, B, C, D, E. Typically, your wave E is a higher low in the coil. And if you can't count 5 waves, if you only have like 3 waves, it's not a completed coil. It needs to be 5 waves. Okay. Next, chart 41. Here's XLE Energy. Still holding in here very well considering what crude oil's been doing with the weakness. You got a nice 7-month consolidation here. I do think this group can eventually have a nice rally, but still stuck in the consolidation. Chart 42, here's the weekly chart. Remember, it has this big weekly coil pattern setting up. Looks really good. Chart 43, here's oil services. Now, crude oil has been weak, and this is more affected by crude oil. You can see so far stalling at the 200-day moving average and channel line. Okay, still above its 9 EMA, so it could find support there, but logical to find some resistance right in here. And moving on to commodities, chart 44, DBC. So far, this is the weekly chart. So far, down 2.4% for the week. Remember, long term, it's in about a 2-year consolidation pattern. Chart 45, here's crude oil. Weekly chart down 2.8% this week. Chart 46, here's the daily chart. Now, it did come off the lows today. Remember, I've talked about this like slanted head and shoulder look. And then we had a nice big sell-off the last couple days before bouncing a little bit today. Chart 47, here's natural gas, UNG. Remember on the weekend I talked about this falling wedge pattern? Well, popped out of there on Monday. That was a breakaway gap. And then consolidation yesterday, now popping. Again, that breakaway gaps are always bullish, so I'm long this. Now, remember, natural gas inventories tomorrow, so that can whip this either way. So it's a little bit of gamble holding into it, but I do like the pattern here, so I'm going to hold into that news. Chart 48, copper, melting down here. It's now back into this. There's a little demand zone. We'll see if this can hold or not. Clearly, that rally in dollar is not helping this. Plus, China is the biggest consumer of copper, and their economy has really been struggling, as you well know. Chart 49, DBA agriculture. This continues to hold up. So far, I favor that pullback. off that September high is a 3-wave ABC. By the way, the KISS system is long, this, which I favor that, agree with that trade. Next, chart number 50, US dollar. US dollar just up and away. Remember, Steve and I pointed out this very obvious 5-wave downtrend with MACD divergence back there in September. Guys, again, if you're new to technical analysis, whenever you can count 5 clear waves, whether it's up or down, you want to start looking for some reversal, okay? Because that's completing a major pattern. But here's another educational tidbit. 5-wave patterns always have MACD divergence, okay? If you don't have MACD divergence, it's likely not a 5th wave. It's probably a wave 3. But we pointed that out, and it's been one hell of a move up. And in fact, after hours, US dollar's up yet again. And in fact, gold is down again. So gold's down another 20 points. So gold has really been getting tranched here. Next, chart number 51, here's gold on the weekly again. Big up week now, up 1.6%. Hell of a rally off that big support we had identified well in advance before it rallied there. Next resistance area is right here, and if it gets through this area, get another big area way up here. By the way, if the dollar rallies enough, that could start affecting earnings on some of the large cap stocks that have a lot of sales internationally. And moving to precious metals, chart number 52, here's gold, which has had a nice correction the last couple weeks. First broke that steep uptrend line, back tested it. That was a short, sold off again. It's now around this trend line here. Honestly, I think it goes lower. Here's the 38 fib, 50% fib. But guys, this should take some time to work off. This is one wave down. So once this does get an oversold rally, I'm looking at that to form a lower high wave B. It'll be on the next sell-off as a wave C that I would be an aggressive buyer again of gold. Maybe it comes down here to the 38% fib, maybe the 200-day moving average. Anywhere in here would be a really great buy over time. Next, chart number 53, here's GLL. That's that ultra short ETF on gold. Remember, this has been on my newsletters and videos for the last couple weeks. Beautiful rally off that wedge. I anticipated this pullback in gold, and it's working out. Look at the volume on this. So it's provided a nice hedge on gold. And chart number 54, here's that weekly chart of gold. Remember, I've been viewing that as a wave 3 of 5 and looking for a wave 4 correction, which we're clearly in now. Remember, guys, this wave 4, it's a larger degree wave 4. This should take some time. For example, that wave 2, the same structure, notice that took, what is that, 1, 2, 3, 4, 6 months. Now, wave 4 doesn't have to take 6 months, but don't expect this to be, don't expect this to be over in a few weeks, guys. This should take some time. So you have to think of time symmetry. That's why I think, this may take a few months at least to unfold. But ultimately, it should be a good buying opportunity because I think gold eventually does go to 3,000 and higher, but it needs to work this off. And chart number 55, there's the ETF GLD, shows you the same thing. Breaking that parabolic uptrend. There's a big demand zone down here, which is likely a magnet over time. Next, chart number 56, here's silver. Also been in a nice correction. Notice the 61 fib is down here at 30. Can't read that anyway. 29.77. There you go. And chart number 57, here's the bigger picture view on silver. Like I said, it's pulling back here off the supply zone. That said, long term, I'm very bullish on it. Once this correction does end, I think it goes much higher to these upper supply zones. And looking at the mining stocks, they have been leading to the downside. Look at GDX here. Look at the ratio. That's the GDX GLD ratio. These stocks tend to lead. They've been leading down. You can see the moving average ribbon. You had all those bullish pinches, all led to higher lows. Well, now the moving average ribbon is bearishly stacked. There was an open gap here, which was filled last week. We had a minor bounce off that, which back tested the channel trend line, became resistance. That was a great short. Whenever you break a trend line, guys, and you back test it, that's always a very low risk trade. Anyway, now we're approaching the 200-day moving average and 50% fib. Watch the 200-day moving average. That could be a logical bounce area. That said, again, any rally that occurs here, I don't think is the bottom. I think we get a lower high wave B of some sort. There's one main wave to the downside here. So eventually we'll get a rally up is a lower high wave B. But let's watch this 50% fib 200-day moving average. And chart 59, here's GDX on the 2 hour. Again, you can just see melting down here. Here's the ratio, GDX daily ratio. These trend line breaks in the ratio work really good for triggers. You can see that trigger here was a good buy signal. The trigger here was a good sell signal. So this trend line is something good to watch. No MACD divergence here either though. So very weak. Chart 60, here's dust. That's the 2-time inverse ETF for GDX. Remember, I've had this on my watch list for the last month. This is a wedge pattern, and here's another education, guys. Wedge patterns have 5 ways. What do you got here? 1, 2, 3, 4, 5. See that? And you had a slight MACD divergence there. So that was textbook, and this is given a nice trade. And finally, chart 61, here's the BPGDM. This is the GDX trading system based on this. This gave a sell signal back here in September off this overbought territory, and this is working out. This Renko chart's very clean, gives very clean buy and sell signals. All right, final part of the newsletter, trade ideas. Tesla, as you know, has had a nice couple weeks. Sorry about that. Little consolidation day today. Next, chart 63, Microsoft. Steve showed it last night as a little coil here. Popped out of that a little bit today. Now, talking about popping, here's Rocket Lab. Boy, oh boy, look at this. Up 28% today, now well off those highs. Big shooting star doji, black candle. So quite extended here now. But boy, guys, this has had a hell of a run. We had it as a long idea back here, you know, in the 5s. Then we had it here in September off this wedge. Then we had it again in October. So this has been a long idea of ours 3 times, and it's been amazing. Hopefully, if any of you were long this, congrats. Hope you took some profits today. Chart 65, here's Rivian. Remember, I put this on my watch list on the weekend, and it's moved up here. Now, it was off the highs today, but it did give a nice pop on some volume off that horizontal rectangle pattern. Chart 66, RXRX. Long idea that triggered last week. Now, this week it tagged my main first target, which is the 200-day moving average. That was the area to take some profits, guys. And you can see it pulled so far pulling back. Chart 67, ECVT was an amazing long a couple weeks back off this nice bottoming pattern, nice volume break. Anyway, hit my first target of that gap fill, but I'm watching it again for another trade here. It's trying to flag here. As you can see, volume patterns are decent. If it can pop here again, you have the 200-day moving average would be another target. And then there's an open gap above. Chart 68, Court. Pulling back here the last few days, but remember, this was a great trade through that 50 area over a week ago. So hopefully you took your profits on that pop. It was a great trade. Chart 69, Mobley. This was the long idea over a week ago. Nice volume patterns, nice bottoming pattern, and it's been working higher. There's an open gap above, which is my main target. I still have a position on it. Chart 70, Starbucks. Now, Starbucks popped on Monday, pulled back, but it's still hanging in here. Again, if you're long this, just put a stop in place. Honestly, I'd like to see it at least hold today's lows. Make sure you have a stop in place. Chart 71, Intel. Remember that broke out of there over a week ago, pulled back. Today it's trying to bounce a bit. Chart 72, MBD. I've been saying to watch this pattern. Now, I had a great pop today. My first target, I said to lock in some gains around the 200-day moving average. Hopefully some of you guys did. It pulled in. But it still looks okay here, guys. Let's see if this can try again. Chart 73, RSI. Now here's an example. This gave a nice quick pop. Then it was up again today. Then it gave it back. Chart 74, Skin. Here's a new setup. Little low price stock. It's trying to base out here. You got a clean resistance right at $2. Increase in volume today. Chart 75, Vanny Medical. Breaking out on expanding volume. So why am I adding it even the fact that it already broke out, because I think this could follow through over today's highs. Next main resistance is right up in here. Charter 76, OPI. Here's a depressed play. Over today's highs could give you a quick trade off the bottom. And the final chart, Charter 77, ARCEC, broke out of a coil here. Yes, it already broke out, but I looked at a 60-minute chart. It looks like it could go higher. It looks like it could be flagging. Here's your next supply zone up here. So you have plenty of room for a trade, so one to watch. All right, guys, quick check on futures again. Gold is down 21, and ES futures are down about, where is it? Down about 4 points. All right, we'll see what happens tomorrow. Again, thank you for all your support. And if you're a YouTube subscriber, consider subscribing to us. And, if you need, feel free to write into us. We talk to a lot of our customers. We can give you some help around the website. I think you'd be happy to take a subscription. We have amazing stuff here. We only do about 2 YouTube videos a week. You get so much more as a subscriber. All right, talk to you later. Take care.